Hi everyone, really excited. It's our fifth batch of the Unit Masters program. Really super happy that everyone is here and really an honor to be speaking on the final session of it. Today I'll be covering an overview of what Unit is, what the Unit network is about, how we envision the future of the token economy, how we're playing our role in shaping the token economy. Anytime anyone's wanting to ask some questions, please feel free to message in the chat, or if you have any thoughts or feedback, please feel free to message. So in terms of starting off the session, love to begin on what is Unit, or what is the token economy. So, we've basically looked at the world and we thought, what are really pressing problems, and how do we solve these problems? And one of the things which we noticed was that many of these problems largely boil down to an access to resources or opportunities. And if you go even deeper, you'll notice that it really is an access to financial resources. The fact that if you want to start a business, there's a bank that decides whether you can get a loan. It's a bunch of investors or funds which say, hey, you're good enough, you have a track record, or I've known you for this amount of time, here's some money, do something with it. And there's all of these gatekeepers, right? Or if you look at many different platforms like Airbnb or Uber, they accrue such a large amount of value, but none of it gets distributed to the drivers, to the Airbnb, to the host. Or you look at a corporation like Google, with hundreds of billions of dollars, all of the people that are building websites which make Google valuable, they don't benefit from any of this value created. So part of what Unit focuses on is this concept of the token economy, the idea that in the future, there's going to be millions and millions of tokens. And what do these tokens represent? They could represent businesses, they could represent people, communities, and all of these tokens, they're a way of distributing value and organizing value in a more efficient and fair way. If you look at how the world works at the moment, the people who have the most amount of money are the people who start companies, people like Jeff Bezos, people like Bill Gates, people like Mark Zuckerberg, and the investors of things. So, people like Warren Buffett. And then most of the population, they're making minimum wage, or the average wage in the UK is $25,000 a year, so about $2,000 a month. And they're just kind of getting by. They're paying their rent, they're supporting their kids, they're putting food on the table, but all they're doing is they're helping create value for the equity holders, the people who own things. And part of the token economy, or part of what Unit is creating, is a future where, whenever you go into a business, whether you use a platform like Zoom, you use you go to your favorite restaurant, it's not just going to be one person who started it, or three people who provided the financing and started it. It's going to be, a community of owners and cooperative ownership. And, very similar to how, when you started making, you wanted to build a website very early on, creating a token, creating a decentralized autonomous organization, as we've covered in our master's program, is still very difficult. Making a website used to cost $500,000, and now you can use your mobile phone and build a website on your phone. So at the moment, creating a token isn't easy. You have to worry about the security of it. You have to worry about finding a blockchain developer to write it for you. You have to study different models of, hey, how do I build it? How do I decide how many tokens I should keep? How much should I sell? How can I distribute it? If I want to launch a vote or polls for my community, how do I do that? So Unit basically makes this process super easy. To create a token, you just give it a name. You say how many of them exist. You can add a picture and give it a symbol, and you've created a token. And Unit has a number of features we provide. The one that excites me the most is the treasury. So why it excites me is because a lot of very serious investors, very serious business people, they look at the crypto space, they look at the blockchain space, and they go, there's nothing there. It's a bunch of people who are making a lot of money, but they're making a lot of money because they got in early, and people are buying these coins or tokens from them in the future. And then someone ends up losing a lot of money, and some people make a lot of money. So it's very zero sum. And the future of the blockchain, the crypto space, the token economy is where it's not zero sum. It's not like one side benefits from the other side losing money, but it's where both parties really benefit. So, a lot of people have some really amazing ideas and they just need a tiny bit of financing, or they need, a little bit of advice or expertise to get going. And the cool thing about tokens is it allows those people to receive the financing, and it allows investors to or supporters of projects, contributors to support many different projects. Like the fund I was working at in London, it was an 800 million euro fund. We invested in like 7 to 15 companies a year, and we had 3,000 people pitching our fund every year. So like on average, maybe 8 to 10 companies a day, and 7 to 15 of them got funded. And granted, we had huge success cases like Spotify, which paid off the whole fund, but it doesn't really work for everyone. It's most people who want to raise funds, it's really difficult. Most people who have an idea and they just want to trial it out, they can't get the community together. If you look at most businesses, startups, people think of it as really risky, or like very unsure whether it's going to succeed. They have a stable job. They're like, oh my gosh, should I quit my job to join a startup or to launch a startup? And part of what us as the core community of Unit, our co-founders, our vision and mission is to make entrepreneurship, make the idea of finance business just super fun and easy. So it's not like a bunch of serious people on Wall Street who are working out the numbers, and you trust the person who knows how to work with finances to bring in the investment, and everyone else is hopefully getting a paycheck or making some value from this project succeeding. But it becomes really easy and fun and fair. And we thought, basically, how can we bring this reality to the future? And we thought, one really cool way of doing that is looking into the future, kind of like when the internet was started, and thinking, okay, what are going to be the biggest tokens in the future? Kind of like, if you went back to 1990s and you said, what are going to be the biggest websites? It might be an encyclopedia, which would be like Wikipedia. It might be a way to search websites, became Google. And we basically thought, okay, what will be the biggest tokens? And we thought, what are the things which represent the most amount of people and support a lot of economic activity and projects? And those are industries, things like music, fashion, property, software developer, like the developer industry, things like that, the industry tokens, and cities. So things like, London, New York, Shanghai, Hong Kong, Dubai. So we basically focused on building up industry tokens and city tokens, and having that support a really nice foundation by which, people can start issuing tokens within this city geography and these different industries. And it also is a really nice way of catalyzing the growth of the token economy. If you look at crypto and the blockchain space, this year there was so much interest in it. I wouldn't say the same about a year ago, or 2 years ago. In 2017, it was very similar to this, but then 2018, everyone kind of like forgot about crypto, or a lot of people who are launching projects just kind of swept it under the rug and forgot about it. So it does come in waves. And one thing that drives people to the blockchain or crypto space, the fact that there's a lot of resources, a lot of talented people there. So these industry and city tokens basically offer this base, by which activity and resources can allow these ecosystems to thrive. And also love to talk about 5 different initiatives we're focused on. One of them is the master's program. So we run these every 2 months at the moment. Our first and main master's program is the Unit Master's Program. And I hope people have enjoyed and learned a lot. And that really provides a good base of blockchain, digital asset, token expertise to people. And what we're going to be rolling out starting next year are industry and city master's programs. So it is also 6 weeks every 2 months. And we basically support entrepreneurs, people who want to be part of a community in a particular industry or city, and doesn't necessarily provide crypto experience or expertise or knowledge, but it really supports people on building up their token economy project in a particular industry or city. We're also launching our conferences. That's super exciting. So we have our first first forum coming up. We've done over 2,000 talks and sessions, but this first main one is the World Unit Forum. That's on October 5th. And then we have 10 different forums, like the World Bitcoin Forum, the World Ethereum Forum, the World Polkadot Forum. That happens in October with 100 speakers in each. And then in November, we have our industry forums. So we have things like the World Yoga Forum, we have the World Property Forum, We have the World Impact Forum, covering how many different industries with 100 different speakers each. And then in December, we have our World City Forums. So we have like our World New York Forum, our World Bali Forum. And what we're really doing here is giving people an opportunity to be part of this cooperative token economy model. I was really lucky to have stumbled upon a bunch of communities. One of the first ones which had a really profound impact on me was one called Kinnrnet, Kinnrnet. And it was really cool. I was basically on the train between Paris and London. I was living in London at the time. And I was talking to the person next to me, just a random person that I met, about some technology stuff I was working on. And the person seated opposite from me said, "Hey, what are you doing next week?" And he was organizing a conference on the island of Jersey. And I said, "Sure, I'll come along." And I ended up going. And it was really unusual because when I got to the conference, there was nothing, there was no agenda, basically. There was, a board where people would fill up sessions. This format of a conference is called an unconference. And it basically allowed, a participant-driven conference where anyone could basically give talks and people could kind of share ideas. And it wasn't one way. If you go to a lot of conferences, like a big stage, and you've got, 200 people, 100 people, 1,000 people listening to this one person. And the really cool thing about this unconference model is that, lots of different people have the opportunity to speak who might not otherwise get the opportunity. And it really gives people a chance to sort of exchange ideas and meet people and build up this community in a really fundamental way. So like really excited for our conferences that's coming up in October, November, December. We'd love to share with you the different forums that we're launching. And if you have any ideas for good speakers, or if you'd like to attend all of it, please feel free. And I promise you it'll be really, really enjoyable. So we have the Ventures program that's coming up soon. So now all of us have completed the master's program. The Ventures program is basically where we can take all of this knowledge in the token space, the blockchain space, the digital asset world, and start applying it, helping projects that, friends are running or people in our neighborhood to introduce tokens for them, as well as launch tokens of our own. So we're going to be launching our first batch in November, and that will be a six-week program or 10-week program where we walk through people on how to build up their token-based project. So really excited for that. And our technology is able to support that super nicely. Also, the Unit University, if you go to unituniversity.com, this is our resource for providing information on many different industries and cities. It's very similar to Wikipedia, but what we're focusing on there is a very in-depth knowledge base for different industries and cities. And what we imagine is, if you look at the moment, there's only 8,000 tokens that exist. In the future, there's going to be, 8 million or 18 million tokens that exist. And this provides a really nice base by which people can contribute information. You can learn a lot about different tokens and projects and understand different industries. Really also excited for the news aspect. So we haven't really spoken or told many people about the news, unit news. And this is where, what we hope to do is give a very collaborative way of sharing updated information and allow people to fact check and get industry, city, and blockchain news in a very transparent and supportive manner. So we will be launching different unit news articles. We'll give industry reports. We'll be covering very similar to how Forbes does a list of top 30 for this industry or top 30 for this region, like top Forbes under 30 Asia or Forbes under 30 Tel Aviv. We'll be doing this, but in a more inclusive way, and really showcasing people who are doing token-based projects, which are not just supporting one person, but supporting a community of individuals. And a really cool thing about news is that if it really should educate and support people in their decision making. So if you look at Jeff Bezos, the founder of Amazon, paid a lot of money for the Washington Post. Why do you think he did that? It's maybe because he believed that he needed a way to influence mainstream news, and part of what our mission and vision with Unit News is to provide a evolution of that, where it's not just very powerful people like the news group, Rupert Murdoch, Jeff Bezos, who are able to kind of help dictate how news is covered, but really provide a way for really community and for people to create a way for news to basically support the coverage of information and reports in different industries and cities. Feel free to ask any questions, or if you have any thoughts on what's been mentioned so far. Also, love to talk about more depth on the treasury. So, one thing, people always compare unit to is other blockchains. How do we compare with Ethereum? How do we compare with Polkadot? How do we compare with Cardano or Solana or Binance Smart Chain? And one really key aspect which we as unit community believe that makes unit so special compared to almost every other blockchain or digital asset, or even why our industry is so early, is because if you go into CoinMarketCap or you go and check out different coins, there is a lack of fundamental value for these coins, in the sense that if a coin was to double in price tomorrow, someone could say it's a terrible time to buy into a coin, or it's a really good time to buy into a coin, and it's very hard to look at a baseline, but which is very different from how businesses are traditionally valued. How you look at a business when you want to acquire it, or you're trying to understand the valuation for it, like on the stock exchange, is you look at its underlying assets. So you look at it like, does it own any buildings? Does it own any equipment? Does it own any, does it have any cash? And you look at a multiple of profit. So depending on the industry, some industries like technology, where companies grow really fast, the multiple of profit is much larger. Something like, Facebook or Google or Tesla, the PE ratio is really, really high. But then, a box and mortar business, something like, Walmart might not be so high, because it's hard to scale it, it's hard to grow. And we believe that, tokens are no different, in the sense that, where this industry will move towards is where, you look at a particular token, what you're interested in is not simply the speculative belief that, hey, I believe someone is willing to pay more for it in the future. You're basically confident that the underlying value for a token is where, if everyone was to sell it at this point, there would be an amount of value which has been accrued, or amount of value which has been stored, where everyone is able to sell at a certain amount. So it's very similar to internet companies. When the internet started, people thought internet companies didn't need a business model. Google only figured out how to make money with advertising in 2003. Prior to that, lots of people were using Google, but they didn't really know how to monetize it. Very similar to crypto. At the moment, people think coins, tokens, they don't need an underlying business model or economic model, which is providing products or services. You just need to make sure that people don't sell that token at the same time, or you need to make sure more people are buying it so that the price never dips. But I suppose what we're confident in the future is that this underlying value is going to be super important for the space.
Amazing, Michael. Maybe it's time to take some questions from the audience. There's one, Crypto Vagabond is asking, are you comparing crypto assets with companies? Maybe let's clarify in which way are we actually looking at the ecosystem?
Yes, most definitely. So great question. I suppose, if you look at every form of asset in the world, whether it's a property, a company, a commodity, a precious stone, like they're all fundamentally very similar. If you think of them as either generating profit or not generating profit, or if you were to sell it, is someone able to buy it now? Can they buy parts of it? So the way we look at tokens is that all assets are very, very similar, and a token is basically a nice way to wrap that asset up and allow many people to partake in the indirect ownership of that asset, and really benefit from the community cooperative ownership of it. Please, Brett.
Hi there,
Brett.
Hi, Michael. Thank you. Yeah, very exciting. The reality of growing the unit ecosystem is that individuals and businesses are going to start putting either their cryptos or the cash into the environment and have the opportunity for that to grow. And for most people, they're actually thinking about considering the risk associated with doing so. Like, what's the downside? And at the very least, can I make sure I retain the value of my assets? So when people talk to you about risk and the downside, and not looking at kind of a long-term play, but just like, I have a cafe, this seems kind of cool, maybe I'll set up a token, but what's the potential downside and what's the defense on that downside? Thank you.
A great question, Brett. So I think there are, a few obstacles or a few risks when creating token. One obstacle is the fact that all of this is so new. So a lot of people might not know, how to interact with a token. A lot of education is needed. Also, regulatory, it's pretty uncertain how tokens play a huge role in terms of the current regulatory ecosystem. I won't say there's any major risk when you run a sustainable token project. One big risk, I think, is when people, issue NFTs or they issue tokens and they think, I'm just going to sell a bunch of coins, push it up in price, take all that investor money. And yeah, those people who bought the token, they paid for it. So I don't really care about them, as long as, I'm making money from selling NFTs or I'm making money from tokens. I think that's a little bit dangerous, because then, people are just buying this speculative value. And even though, the first 1 person, 2 people, 3 people, 5 people, 10, 15, 25 people might be benefiting from, making money by offloading the bag to someone else, someone is left holding the bag. And then what that basically means is they're left holding something which nobody might buy from them. And then maybe they put their life savings into it, and it would be really unfortunate then. So part of what this treasury offers is a way for, as Brett was mentioning, people to know the level of risk that they're getting into in a very transparent and trustless manner when they buy into something where it's not just speculative price. When you buy an art piece, you buy an NFT, there is no floor price at the moment. Meaning, if you buy an art piece or you buy an NFT and nobody buys it from you, you could be left holding something which is worthless. If you're left buying a piece of land and nobody buys it from you and you can't use it, it's worthless. So from a purely financial point of view. So I hope that clarifies the point. And I think that really touches on why this treasury concept is so simple yet so important. Please, Ra.
I'm just curious, because I have been studying finance for the past 30 years, and I honestly, I think I'm missing a point that you may have very clear. I fail to understand, how does commodities compare with, for instance, Bitcoin? There is no profit to be made in gold. I don't see how gold generates profit in the same way that a company shares would. The same thing can be said for BTC. I just fail to see, for example, my house doesn't generate me any profit. They generate me a lot of debt. So I'm just curious, how do you see a token in the same as a share of a company?
Yeah, it's a great point. So I guess, taking what you just said, when you look at, companies, you look at, publicly listed companies, you look at private companies, you look at commodities, you look at cash in the bank, you look at, government bonds. All of these are places where you can store value, right? They all are places you can store value. Let's say you had, $1 million or you got $1,000, you can store it in all of these different forms. Now, you as a person storing value or investing value, all you want to know is that it's at least able to hold its value, or it's able to be worth more. You don't want it to be worth less, and you don't want to lose your money. You don't want to lose your value completely, right? So I guess the assumption with Bitcoin, the assumption with many cryptocurrencies, the assumption with many different investments or assets at the moment is people are completely unaware of the downside risk. If let's say you invested in a friend's startup, you invested in gold, these different things, in the worst case scenario, there is a price if you needed the money next week where there is a price by which there's the amount of money you can get if you wanted the money next week, basically. And it's not very clear at the moment. Like, if you bought a bar of gold and you needed to sell that bar of gold next week, you're pretty confident that there is that speculative demand that someone else is going to buy it back from you next week, right? But there isn't a place, or there isn't a way for you to give that bar of gold to someone, and well, there isn't a guarantee that when you give this bar of gold to someone, you're at least going to get that amount of funds back. Kind of like, if you owned 100% of a company, you could sell that company for, say, or let's say you owned 100% of a token on unit and it's backed up by $1 million in the treasury. You can sell that token for, say, $2 million, $3 million in speculative value. But in the worst case scenario, you know that you own 100% of that $1 million in the treasury. So it basically gives you a level of, understanding or worst case scenario, the lowest price. But when you buy Bitcoin, you buy gold, there isn't that clarity by which the value of the price could drop, where you know what is the worst case scenario when you're getting into something. Does that kind of answer your point, Ra?
No, I do see the point of having a bottom. What I don't see, for instance, because to me it's very different. Like for instance, Kodak is no longer here. There was one point where Kodak shares were really high. In the year 2000, for instance, Amazon price went down 94%. So I see what we're talking about in terms of the bottom. What I don't see, for instance, how can a company, for instance, like Kodak, be compared to gold? Gold has been money for the past 5,000 years. No company can do that. There's no company that we can say can be self-established for 5,000 years. I just think the way I look fundamentally, when I look at what determines the value of a company, is very different than when I look at what determines the price of commodity. For instance, petrol has been a commodity for centuries. We don't have a company that has outlast centuries because the fundamentals change much quicker on a company than it would ever change on a commodity. So that part of the comparison that to me is a bit off.
I understand. I guess, us at Unit, we kind of look at, what you said, different forms of assets, different forms of storing value, different investment options as very binary. It's all kind of the same thing, and all people care about is that it's at least able to hold on to its value or potentially appreciate value. And if we're able to take this black or white lens, then it allows people to, when they buy, a barrel of oil, or they buy, a piece of, their friend's new restaurant, or they invest in their friend's startup, or they invest in a publicly traded company. We just want to provide at least people that level of clarity by which they know what they're getting into. And I totally agree with you. I think I'm a big believer in Bitcoin. I think Bitcoin's going to $1 million, and it's really on the verge of changing the world. Though I think what will come after Bitcoin is a Bitcoin which holds a bunch of Ethereum, or an Ethereum which holds a bunch of Bitcoin. So, if you could hold one Bitcoin, or one Bitcoin with, X amount of other digital assets in there, or an ability to, reduce the supply of it faster, or, benefit from holding other digital assets, it just becomes superior in the sense that, I was, very involved with Bitcoin early on. And I do believe that, it's played such a big role. And even our treasury is backed up by Bitcoin, it's backed up by Ethereum, it's backed up by Polkadot. But what we think is going to happen in the future is, other than these three digital assets, maybe like 4 or 5, which are reserve assets, every other coin, people have, names like altcoins or other names for these long tail of coins, they'll need to be backed up by Bitcoin. Meaning, if I bought into your altcoin, or I bought into your project's coin, I'm going to ask how many Bitcoin is backing up your project. And by, buying into your project, are you going to increase the amount of underlying Bitcoins that I hold? And that's all I really care about. But then what happens in the future is, people are going to look at Bitcoin and say, what is Bitcoin backed by? And then, maybe, instead of there being 4 exceptions to the rule, there's only going to be 1 exception, which is Bitcoin. And even Unit, we're having to back up Unit by Bitcoin, Ethereum, and DAO. So I really like your question. I think really excited to see how, more and more projects are backed up by Bitcoin, not just backed up by, deflationary assets like the US dollar or other fiat currencies, but, deflationary assets, and it really incentivizes people to hold and to create value and not be spending it in a consumer street. Daniel, please.
Thank you.
Yes, thanks, Michael. I'll try and ask this question succinctly. So a lot of people have been talking about blockchain and crypto and NFTs, and we're in this state of a wealth transfer, and especially with NFTs, what do you see, or do you see fractional ownership being a future, especially for the higher end NFTs, and then enabling this kind of wealth transfer to happen?
It's a really good point. So, part of what excites me so much about the token economy and what really drives me is solving the wealth inequity. What we touched on earlier, the fact that, small group people control and hold most of the wealth in the world, and the long tail people don't really benefit from that. However, apart from, NFTs supporting artists, which I think is really, really cool, I think what is going to end up happening with NFTs is going to be very similar to ICOs in 2017, where, a lot of people are releasing NFTs. People are like, cool, I'm making a bunch of money buying NFTs because, you know, they buy the NFTs, someone buys it for more, someone buys it for more. A lot of wash trading happening. Wash trading basically means, you know, people manipulating the market or making it look like it's going up in value. And then, you know, a lot of people are like, okay, fine, I'm going to buy some NFTs because all my friends have made money from it. And then they buy it and then they get left holding the bag. You know, they get left holding NFTs which nobody buys from them. So, you know, I guess that's the first thing. The other thing is, you know, part of what excites me a lot about tokens is the fungibility aspect. And what fungibility means is the fact that, you know, you can slice it up, you know, the fractional ownership aspect that Daniel mentioned. And, you know, an NFT stands for non-fungible token. So I guess by its definition, you know, an NFT isn't divisible, you know, by default, you know. So a lot of people, I guess, are mixing up the NFT term and token term. And I think the other cool thing is that, you know, these tokens, you know, whether it's NFTs or fungible tokens, should be backed up by underlying assets, in the sense that, you know, if I buy a token from an artist, I really want to be buying into the artist, where, you know, if the artist becomes wildly successful, sells a bunch of art pieces, makes a bunch of art shows, I'm able to help them, you know, be a bigger success and benefit from their upside. Because the way we kind of view NFTs at the moment is kind of like getting an autograph. It's kind of like, you know, with the internet, you know, it's kind of like posting pictures on the internet. You know, posting pictures on the internet are cool, but what really makes it cool is where, you know, there's, you know, comments on the picture, you know, or there's pictures or videos where you can kind of learn lots of stuff on. So NFTs are really scratching stuff. The thing that really excites me about NFTs is, you know, last year, the year before, you know, I used to tell people, you know, tokens can be applied to so many more things than just technology protocols. You know, but then a lot of people are like, you know, unless it's a blockchain platform or unless it's a decentralized app, you shouldn't make a token for it. So one thing that was really awesome for me, and I'm really grateful for, you know, things like OpenSea or things like the NFT platforms, is they kind of open people's eyes and have them realize that, you know, tokens can really do so much more for the world. But what's really bad for me is the fact that, you know, a lot of people are creating tokens thinking that they can just sell them and they don't need to worry about who they're selling it to or who, all the hard-earned money that people have, you know, given up their precious time or resources to buy are left holding tokens, which people might not buy from that in the future. So it just needs a more sustainable economic model, basically. Please, Daniel.
Yeah, so just what you're saying about the NFTs, like the fact that the NFTs are non-fungible, right? So by their definition, they can't be broken down. But I'm in a few Discords and a few groups where people are talking about leveraging the power of smart contracts and actually having a smart contract that holds the NFT, and then people are able to buy in as like, yeah, fractional owners. So where they can't buy a floor CryptoPunk, but they can grab 6 people together, via a smart contract mechanism, and this is still experimental, obviously, but yeah, and then getting in and get a hold into it.
Yeah, totally agree. But I guess, you know, if you're needing to fractionalize, you create a fraction of an NFT to begin with, then you really should just have many more of that first asset to begin with. So it's kind of like, imagine you're at a company and that company only has one owner, and then you've got a subsidiary, or you've got a holding company of that company, like something which owns that company with many different owners. If that case, you don't even need that first company to begin with. You might as well get rid of that first entity, and then you don't need an NFT if you can already fractionalize the token. So what's a good way of explaining this? So it's if you can already if you can already have an asset, you know, like CryptoPunks fractionalized, then there's, it just makes so much more sense to have something fungible than non-fungible. That's, I guess, the underlying thesis of it. And you don't really need this added layer. So in our opinion, by fractionalizing an NFT, you're adding a layer of complexity, and it's not really necessary. And another big problem is that you end up with having people collectively spend a lot more money on something which might not be that valuable, in the sense that, you know, if this underlying NFT isn't worth anything, a lot of people are chipping in a lot of money to buy this underlying NFT, then basically it could be problematic because people are left holding the bag, basically.
Sure. No, great. Thank you very much. Appreciate it.
Cheers. Maybe respond to some of the questions here from the chat below. So we have a question from Brad. Why did you choose to build on the system on Polkadot? Are there other cryptos that might underpin Unit? Great point. So we built it on Polkadot because it's really the most advanced blockchain builder. And, you know, we kind of imagine a future where different blockchains are interoperable, and basically means that different blockchains talk to one another. Let's say Bitcoin is talking to Ethereum, Ethereum is talking to Cardano, Cardano is talking to Binance Smart Chain, and it's not having to go through centralized exchanges, or it's able to just flow fluidly through and talk to one another. Kind of similar to how if you send a Hotmail email to a Gmail email, it doesn't really matter which email you're using. It's just able to correspond and message with one another. So what Polkadot does really cool is allow people to build blockchains. In our case, it's the unit network blockchain, and the interoperability aspect. And it takes care of the shared security. It takes care of the communication between blockchains. And we also think that, there's, with Bitcoin, amazing payment network, decentralized, open everyone's eyes to the idea of this concept of blockchain technology. Ethereum said, payment networks are cool, but let's build other things than just payments. Let's build decentralized news. Let's build decentralized applications like social networks. But then, everyone's trying to build on this one chain, when really a general purpose chain like Ethereum is likely to be surpassed by application-specific chains. That basically means blockchains that do one specific purpose. So, the unit network chain is focused on the token economy. And, there might be another chain focused on the restaurant business or the logistics business. And then all of these chains focus on that specific thing, and then are able to talk together in a very fluid way. And it allows it to scale really nicely too. And then are there any other cryptos that might underpin unit? So Cardano, Solana, LTC Link. So we basically have thought, very similar to Ra's point earlier, that we basically need really strong reserve assets, things that, in the next 5 years, we're not going to be like, is this going to disappear? It's going to last forever. So at the moment, we support Bitcoin, we support Ethereum, we support Polkadot. We're looking to support BNB, Solana, Cardano, but I guess we want to make sure that these are very strong reserve assets, meaning, they're going to be worth much more in the future. They're not going to disappear. It's decentralized. So, there isn't a single entity that can stop it, or it's able to protect the value of, millions of projects and individuals around the world. Please, Tariq.
Okay, so Michael, I have a question about admin keys. Am I audible?
I'm sorry, can you please repeat yourself?
Okay, so I have a question about this admin keys, how admin keys are managed. So for example, a common investor, if someone has started a project and wanted to be more decentralized, so how it's shared that it's safe, because if we see some projects, it's not revealed that who managed this admin key, and is it safe that in future this project can grow. So I have a question about this private key, how a common person can know that admin key is safe.
Yeah, that's a great point. So I guess, us at Unit, I guess 2 different points. One is from the project point of view. So we try and abstract the responsibility of a project to handle its keys, such that, in the sense that, a lot of projects will say, hey, we got hacked, or, we like rug pulls, basically people stealing money. And what we have is the bank and the treasury. So the treasury provides this level of, base fundamentals, and allows people, when they buy into a project, to understand that, okay, these are the amount of funds which are secure. And, with the assumption that everyone who creates a token is potentially a scammer or a bad actor, the treasury basically allows token holders or contributors, backers to know, okay, these are the amount of funds, but even if the project disappears, these funds are secure. It provides that security. The second thing is, I think projects will evolve in the future where, if there is a single entity or actor which is able to shut down the project, then it's an extremely risky or speculative project. People will only invest in a project when it's big, only if it's decentralized. If there's one point of failure, or if there's a lot of risk of it potentially being shut down, then the speculative trading price will not be super high. It's going to be much lower because of that risk. So it's quite amazing that hundreds of billions of dollars are trusted with protocols which which at any point, people could just shut it off. If you look at, things like USDT, USDC, you look at maybe Binance Smart Chain, it's not as decentralized or distributed as it should be. I guess, granted, we are very early in this industry, though I'm pretty convinced, if you look 5 years ago, Ethereum was barely launched. You look 5 years to the future, I'm not sure Ethereum might still be around. We might have, things like Unit, things like, Polkadot and a new token economy where people don't worry about this underlying layer of the blockchain technology. It's going to become largely commoditized. So the same way, it used to be the hardware that was super interesting. You had, Compaq, you had Sony, you had HP, all trying to build computers. And then the operating system was interesting, and nobody cared about the underlying hardware. And then it moved from the operating system to the web, and it didn't matter if you had a Mac or a PC, it was just the web solution. And then it moved from, the web to the mobile phone, so I'm pretty excited that, we're going to move from, the mobile app sort of revolution to a decentralized app revolution where, it's not going to be a company in San Francisco or in London or a big city, which is what these millions of people, whether it's drivers on Uber or hosts on Airbnb, depend on, but it's trustless, meaning that, people wake up in the morning and they're not like, I hope this application or this marketplace doesn't, delete me from their system because, my livelihood is over, but they know that they're secured in a trustless way. So I hope that answers your point. Sorry. And also with private keys, I think very similar when, email came out, it was super complicated to use. Really exciting thing about Unit is that we make it super easy for people to manage digital assets and crypto in a trustless way. Please, Rob. But we can't hear you.
I think it's important to point, at least in my view, that NFTs are not the same as a store of value. They are a store of culture in the sense that when you buy a Picasso, you buy a Picasso because you feel somehow connected to the art piece. Or when you buy any other art piece that is particular to any culture, you feel connected to that specific culture. And you don't buy with the intent of selling next year a Picasso in the same way you don't buy a piece of art regarding the price in 3 years. And I see a lot of people mistaken that NFT is the same as buying a crypto where you can analyze or take a look at the fundamentals of a crypto and foresee the demand increase for it. NFT, I think, is more like, it should be treated more like art. And I'm talking about art NFTs. I don't talk about the other different NFTs that, of course, has different functionality in our society.
It's a really good point, Ross. So I guess, kind of the way, you just mentioned looking at NFTs is, we kind of look at tokens and we kind of assume all tokens as being kind of the same thing, and we kind of same as websites in the sense that, you looked at the internet before. Some websites you could say you look at it once a month, some websites you say you use it every day, but fundamentally they're all websites. And if you want to assess, the viability of, certain websites growing in traffic versus not growing in traffic, you got to look at the fundamentals. You look at how useful this website is. You look at, like really binary metrics of determining how popular websites. So fair enough. There might be arguments that people might speculatively believe in certain tokens more because of the cultural aspect, because of the emotional attachment to it. But I guess the way we look at tokens is very black and white in the sense that we look at a token, we look at what is its liquid or illiquid assets backing it up. It's really the ability to generate value. And how is value generated? Value is generated when a product or service is delivered and people are willing to pay value for it. And what makes a successful business? A successful business when you're able to develop a product or service, you're able to pay a lower cost for it, and you'll be able to sell at a higher price. So there is a margin of profit. If you look at Apple, Apple is valued at say $3 trillion, but it's only got $200 billion in cash. That means that people are willing to pay like 1.8, 2 point something trillion dollars of value more than the 200 billion it has. Why is that? Because they believe that Apple is going to continue to be delivering amazing products and services, and they're able to deliver some of this profit that they make from delivering the product services to the Apple token holders or shareholders in this case. Okay, so maybe one more question, and then we can move to 7 minutes of breakout rooms. I really appreciate everyone's time and super excited as we move on to this token economy journey together. And feel free to ask any more questions to the group or reach out to me directly, or if there's any way I can help or support anyone here. Thank you. Okay, maybe a question here from Isabel. She's asked some really amazing questions. I'll touch on this one. Can you expand on how a city token works? Could one application be an integration with city government services that streamline healthcare, access, housing, food? So our city and industry tokens are quite similar in the sense that these are kind of like index funds. They're kind of like a way to support an entire industry or support, be it a stakeholder in a particular city. And, you know, we plan to raise $150 million US for each of our industry and cities. So we have 50 industries and 50 cities, and we will not use these funds to invest in city projects or industry projects. We simply leave it in the treasury. So how is it kept in the treasury? So the treasury is basically held in digital assets. It's the only way of backing tokens in a trustless way. Like these are held in Bitcoin, Ethereum, DOT. We can't do this if it was in a traditional bank account because that wouldn't be trustless. We couldn't back it by real estate because that wouldn't be trustless. So we keep it in Bitcoin, Ethereum, and DOT in this digital treasury. And the belief is that, you know, when we build up these industry and city tokens, a lot of people in these industries and cities, they're going to be launching tokens. They're going to see, wow, you know, there's so much money in the fashion token economy. Me as a fashion designer, I'm going to launch my own fashion token for my brand. And then, you know, my customers, my community is going to buy into it. I'm going to sell more clothes. I'm going to be able to charge slightly higher prices. And it's not just going to be me as the fashion designer that benefits, or me as the real estate agent. It's going to be, you know, the community cooperative economy that benefits. So we have no doubt that this is going to revolutionize the world more than, you know, the mobile phone, more than the internet. And, you know, what the internet did to information, the mobile phone did to communication, tokens are going to do to something much more fundamental, which is value. You know, there's so much value in the world, you know, whether it's, you know, oil in the ground, you know, amazing infrastructure like, you know, buildings and assets, or even people who are super smart. You know, they've studied for countless amounts of time, have a wealth of experience, but it's just really badly distributed and allocated. You know, there's people who are willing to work, but there's people who don't have the resources to pay those people. But if they were able to pay those people, then they're able to create way more value. So I'm really confident that in this next 7 to 8 years, you know, every single city and industry will move towards the norm of being part of the token economy. And, you know, money is going to be a concept that people think about, but it's not going to affect them it's not going to make a big decision. Kind of like, you know, people don't worry about, you know, how they're going to make their next meal, or a lot of people in the first world countries anyway, they don't worry about oxygen, or they don't worry about water, you know, but maybe not long ago, you know, that was an issue. So I'm really excited because I think this is going to make the rich richer. So people like Jeff Bezos with $200 billion, they're going to have, you know, trillions of dollars, but, you know, the average person who's in debt or is really struggling is going to have a really nice base. And I'm really excited for us being part of the token economy journey there. So I guess we'll wrap up now. I'm really excited that, you know, it's our fifth batch for the master's program. I'll set up some breakout rooms now, and looking forward to connecting with each and all of you in the future. Thank you.
Thank you, Rob. Thank you, Andrew. Great to see you. Okay. Well, thank you so much, everyone. Looking forward to it. Just feel free to write to me if you have any thoughts, feedback, or questions.
Awesome. Thanks, everyone. Thanks, Michael.